There's a guy who worked 300 hours of overtime in 2025, made an extra $13,000, thought he was crushing it. Then his buddy, who's a tax preparer, looked at his pay stub and laughed. Turns out the guy's getting back maybe $1,900 when he files. Not $13,000, $1,900. Now you might think that's a scam, but it's actually exactly how the law was written. And almost nobody read the actual bill. They just saw the headlines that said no taxes on overtime and did the mental math wrong. Here's what gets really interesting. Right now, in early 2026, there are millions of people who worked overtime last year expecting one thing, about to file their taxes and discover something completely different. So the question is, are you one of them? I'm going to explain exactly how the overtime tax deduction actually works, why the math is way weirder than you think, and how to figure out what you're really getting back. Because the gap between what people expect and what they're going to get is massive. And that gap is pure psychology. By the way, I built a free early retirement calculator because most online ones are mathematically wrong. It uses BlackRock and Vanguard logic to expose the weak points in your plan, and I only ask for your email to send the report so I don't store any of your financial data. Link in the description. Look, here's the core metaphor I want you to remember. Think of your overtime pay like a sandwich. You've got the bottom piece of bread, that's your regular hourly rate. You've got the top piece of bread, that's the premium, the extra half, that makes it time and a half. The government is only letting you deduct the top piece, not the whole sandwich, just the top piece. Everyone heard no taxes on overtime and thought they could deduct the whole sandwich. Wrong. And that one misunderstanding is going to cause some serious confusion when people start filing in the next few months. The One Big Beautiful Bill passed on July 4th, 2025. Very patriotic. The overtime rule technically kicked in January 1st, 2025. But here's what nobody talks about. Payroll systems are run by companies that move at the speed of continental drift. These are the same systems that still ask you to fax things. So your employer kept withholding taxes on your overtime all year because their software wasn't updated and they didn't want to get audited. That money's been sitting in an IRS account with your name on it. They're not going to Venmo it back. You've got to go get it. First, escalation. Let me show you how the math actually works, because this is where it gets weird. Say you make $30 an hour. Your overtime rate is $45 an hour, time and a half. You work 10 overtime hours in a pay period. You get paid an extra $450. Sounds great, but remember the sandwich. The bottom piece of bread is your $30. That's just regular pay that happened to occur during overtime hours. The top piece, the premium, is $15. That $15 per hour is the only part that's tax-free, not the 45, just the 15. So if you worked 100 overtime hours in 2025, you didn't earn a $1,500 deduction. You earned a $1,500 deduction. Wait, that sounded the same? Let me break it down differently. Your pay stub says you made $4,500 in overtime. That's 100 hours at $45. But your deduction is $15 times 100 hours, $1,500, not $4,500. The difference, the $3,000, that's just your normal hourly rate. The IRS is saying, hey, you would have been paid $30 an hour anyway. We're only giving you a break on the extra 15. Now you might be thinking, okay, $1,500, that's still pretty good. But hold on. This is where everyone makes the second mistake. It's not a credit, it's a deduction. And the difference between those two things is enormous. A tax credit is dollar for dollar. You get a $1,000 credit. Your tax bill drops by exactly $1,000. A deduction just reduces your taxable income. The actual refund you get depends on your tax bracket. This is where the psychology kicks in hard, because people see $1,500 deduction and their brain translates that to $1,500 refund. Nope. If you're in the 22% bracket, that $1,500 deduction saves you about $330 in federal taxes. Not $1,500, $330. I've been running my own business for over a decade. I've sat in rooms with accountants who bill $400 an hour. And you know what they all say? The average person has no idea how marginal tax rates work. None. They think if they get a raise that pushes them into a higher bracket, they'll somehow take home less money. That's not how brackets work. But that misunderstanding is everywhere. And it's the same misunderstanding that's going to hit people when they file their overtime refund claims. Second, escalation. Let's run a real scenario so you can see how this plays out. You made $100,000 in 2025. Single filer. $20,000 of that was overtime pay. You're feeling good. You worked hard. Now you file your taxes. You get the standard deduction, which for 2025 is $15,750. So your taxable income is $84,250. The IRS slices that up. First, $11,925 is taxed at 10%. Next chunk, $36,550, taxed at 12%. The remaining $35,775 is taxed at 22%. That 22%, that's your marginal rate. That's the number that matters. Out of your $20,000 in overtime pay, let's say $7,000 is actual premium pay. That $7,000 comes off your taxable income. Since it comes off the top of the pile, you save 22% on it. 7,000 times 0.22 is $1,540. That's your refund boost, not 7,000, not 20,000, $1,540. And that's federal. You still owe state income tax in most states, plus Social Security and Medicare. Those don't care about the overtime deduction. They take their cut no matter what. Here's a fun thing that happened. I was talking to a guy who works in logistics. He told me he picked up every overtime shift he could in 2025 because he thought it was all tax-free money. He worked himself into the ground. 400 hours of overtime. Missed his kids' soccer games, missed anniversary dinner. He calculated in his head that he'd made an extra $24,000 tax-free. When I walked him through the actual math, the premium portion, the deduction, not credit distinction, his face just went blank. His real refund was going to be around $2,000. He'd been planning to use that imaginary $24,000 to pay off his truck. Now he's just tired and still has a truck payment. That's not a problem with the law. That's a psychology problem. His brain did what all of our brains do. It took a headline, filled in the gaps with optimistic assumptions, and then locked onto that number as truth. Expectations versus reality. The gap between those two things is where all the pain lives. Third, escalation. Now let's talk about the income limits, because this is where it gets really interesting. The government loves a good phase out. They give you something with one hand and snatch it back with the other if you make too much. Under the One Big Beautiful Bill, your overtime deduction starts to phase out when you hit $150,000 in modified adjusted gross income if you're single. $300,000 if you're married filing jointly. Once you hit $275,000 single or $550,000 married, the deduction is gone completely. You get nothing. If you're somewhere in the middle, the math gets spicy. You lose $100 of deduction for every $1,000 over the threshold. Let me show you how this works. Say you made $200,000 in 2025. You're single. The phase out starts at $150,000. So you're $50,000 over. The full phase out range is $125,000. That's the gap between $150,000 and $275,000. So you take your $50,000, divide it by $125,000, and you get 0.4, 40%. You lose 40% of your max deduction. The max is $12,500. 40% of that is $5,000. So you can only deduct $7,500, even if you worked enough overtime to hit the $12,500 cap. This is the kind of math that makes people's eyes glaze over. But here's why it matters. There are a lot of people who worked massive overtime specifically because they thought it was a tax-free windfall. Guys in construction, guys in manufacturing, nurses, cops, they ground themselves down, and now they're going to discover that not only is it not tax-free, but if they made too much, they get even less of a deduction. The system is designed to reward people who need it least. If you're already making $150,000, you probably didn't need to work overtime. But if you're making $60,000 and working overtime to keep the lights on, you get the full deduction. That's actually kind of progressive, which is weird for a tax bill, but I digress. Fourth, escalation. Here's the kicker that almost nobody's talking about. Your employer has been withholding taxes on your overtime all year. That money is sitting somewhere in the federal system, but the IRS isn't going to automatically calculate your refund for you. You have to claim it. And here's the thing. Most people use TurboTax or H&R Block software. Those programs are going to ask you questions, and if you don't know what you're looking for, you're going to miss it. The software will ask about overtime pay. It'll ask about your total hours. But if you just plug in the total overtime number from your W-2, you're going to get the wrong deduction. You need to manually calculate the premium portion, the top piece of the sandwich. And if your pay stub doesn't break that out clearly, you're doing math with a calculator at midnight, trying to reverse engineer your hourly rate. I went through this exercise myself. I don't work hourly anymore, but I wanted to see what it would look like. I pulled up a sample pay stub from a friend. His pay stub showed year-to-date overtime pay, but not total hours, just a lump sum. To figure out his deduction, he had to take that total, divide it by his overtime rate to get hours, then multiply those hours by his premium rate. 3 steps of math that most people aren't going to do. They're just going to see the big number and assume that's the deduction. And they're going to be wrong. TurboTax might catch it, or it might not. Depends on how you answer the questions. And if you get it wrong, you either leave money on the table or you get a letter from the IRS 6 months later asking for money back. Neither is fun. Let me give you a mini case study. There's a nurse I know. She worked in a hospital that was perpetually short-staffed. She picked up extra shifts all through 2025. Made $38 an hour base, $57 an hour for overtime. She worked 220 overtime hours total. That's $12,540 in overtime pay. Sounds like a lot, but her premium was $19 per hour. 19 times 220 is $4,180. That's her deduction. She's in the 22% bracket. So her actual federal refund from overtime is about $920. She was expecting $12,000. She got $920. She texted me when she filed and just said, quote, "This is bullshit." And I get it. The messaging was misleading. The headline said, "No taxes on overtime." Her brain did the rest. But here's a deeper issue. She's not mad at the math. She's mad because the reality didn't match her expectations. And that gap, that's where all financial mistakes live. People don't lose money because they're bad at math. They lose money because they build a mental model based on incomplete information, and then they make decisions using that broken model. She worked 220 hours of overtime. That's 27 extra shifts. She missed birthdays. She worked through holidays, all because she thought she was banking tax-free money. The truth is, she made good money, but it wasn't tax-free. It was tax-reduced, and the reduction was smaller than she thought. This is the stuff that drives me insane. The policy itself is fine. It's a reasonable middle ground. You get a break on the premium, not the whole thing. That makes sense. But the way it was communicated was pure politics. No taxes on overtime sounds way better than reduced taxes on the premium portion of overtime, subject to income limits and marginal rate calculations. That second version is accurate, but it doesn't fit on a hat. To be fair, this is how all tax policy works. The government wants credit for helping people, so they make the announcement as broad and appealing as possible. Then they bury the details in the actual bill. And most people don't read bills. They read headlines. So you get this massive gap between perception and reality, and that gap gets filled with optimism. And optimism, when it comes to taxes, is expensive. Here's a little sarcastic aside. You know what's funny? The IRS has a whole section on their website explaining how this works. It's like 9 pages of dense text with examples and worksheets. You know how many people read it? Almost none. You know how many people complained on Twitter that the overtime deduction was a scam? Tens of thousands. Everyone wants the answer. Nobody wants to read the manual. And then they're shocked when reality doesn't match the story they told themselves. Another quick cutaway. I saw a TikTok from a guy who said he worked overtime specifically to buy a boat. He was dead serious. He said the government was giving him free money, so he was going to use it to buy a boat. Someone in the comments asked if he understood how deductions work. He replied, "It's tax-free, bro. I already did the math." I checked his page 2 months later. He did not buy a boat. He did post a video complaining about his tax refund. The math, it turns out, had not been done. Now, here's what you actually need to do. Pull your last pay stub from December 2025. Look for year-to-date overtime pay. If it shows your total hours, great. If not, divide your total overtime pay by your overtime hourly rate. That gives you hours. Then figure out your premium. That's your overtime rate minus your regular rate. Multiply premium times hours. That's your deduction, not your refund. Your deduction. Then multiply that deduction by your marginal tax rate to estimate your actual refund. If you're in the 22% bracket, it's 0.2 to 2. If you're in the 24% bracket, it's 0.2 to 4, and so on. And if you made over $150,000, you need to calculate the phase out. Take your income, subtract $150,000, divide by $125,000, and multiply by $12,500. That's how much you lose. Subtract that from your max deduction. That's your actual deduction. Then apply your tax rate. Is this annoying? Yes. Is it worth doing? Also yes. Because if you don't do it, you're either going to leave money on the table or you're going to file wrong and have to amend later. And amendments are a nightmare. The IRS takes months to process them. You'll get your refund eventually, but you'll be checking the mailbox every day like a paranoid person waiting for a package. Here's the thing about money psychology that I've learned after 10 years in business and a few $100,000 invested. Most people don't have a money problem. They have an expectations problem. They build a mental model of how things should work. And then when reality shows up and says, actually, it works like this, they feel cheated. Even if reality is fine. Even if reality is actually pretty good. The feeling of being wrong is so uncomfortable that people would rather be mad at the system than update their model. The overtime tax deduction is a perfect example. It's genuinely a good deal. You're getting a tax break on money you wouldn't normally get a break on. But because the headline promised more than the details delivered, people feel ripped off. And that feeling is going to poison the whole thing. They're going to tell their friends it's a scam. They're going to post about it online. And next year, fewer people will work overtime because they'll think it's not worth it, even though the math says it is. This is why I'm obsessed with reading the actual documents, the SEC filings, the earnings reports, the tax code. Because the gap between the headline and the fine print is where all the actual information lives. I've got multiple hundreds of thousands of dollars invested. I didn't get there by believing headlines. I got there by reading boring documents and doing math that made my eyes hurt. And every single time, the effort paid off. Because while everyone else was making decisions based on vibes and optimism, I was making decisions based on numbers. And numbers don't lie. They're just really inconvenient. So let's bring this back to the hook. You worked overtime in 2025. You're expecting a refund. But the refund you're imagining is probably way bigger than the refund you're actually going to get. Not because the system is rigged, because the math is weird and the communication was bad. The one big beautiful bill is a real thing. The overtime deduction is real, but it's a deduction on the premium portion only. It's not a credit. It phases out at higher incomes. And your employer withheld taxes all year, so you're getting back money that was already yours, not free money from the government. Here are your 3 takeaways. 1, calculate your actual premium pay. Don't just use your total overtime number. Go to your pay stub, find your regular rate and your overtime rate, do the subtraction, multiply by hours. That's your deduction. 2, remember, it's a deduction, not a credit. Multiply your deduction by your marginal tax rate to estimate your real refund. If you're in the 22% bracket, it's about 22 cents per dollar of deduction. 3, if you made over $150,000, calculate the phase out. You might be getting less than you think, or nothing at all. Do the math before you file so you're not surprised. And here's the cynical kicker. Next year, there's going to be another bill with another headline that promises something simple and delivers something complicated. And most people will read the headline, skip the details, and build their plans on a foundation of optimism. And they'll be confused when it doesn't work out. Because lazy investing built more fortune than crypto memes, but lazy research never built anything except disappointment. Do the math, read the bill, manage your expectations. Or don't, and be mad later. Your call.